All right, all right, all right. Good morning, people. Good morning, lovely people. Screener Steve is here, brought to you by cheatcode.com. That's my little intro. I like that one. All right, we're gonna get this party started today. Today we are going to be doing one of my favorite strategies. This is called I call it the consolidation slash pullback breakout. And this is, if you've been to one of my other classes where we did like the 6 and 17 crossovers, which a lot of people do like, this one is a little added on to that, right? And we're gonna get this party started. Let me share my screen here. All right, cool. Can everybody see my screen?
Oh yeah.
Okay, yep. Cool. All right, see, I got all this stuff on my screen, these lines and everything else. Man, we're gonna take all that off. We're gonna take all that off because I want to show you the basics. Let me show you everything. What I'm gonna do, I'm gonna take off the cheat code and everything because the cheat code make it even better. But we're gonna take it off for right now. And I'm going to, excuse me. All I want to show you, I want to take off candles and everything. This strategy, I want to show you how it works with just the line, right? Before I put on my candles and anything else. And then we're gonna go over a little bit of Hakanashi. I want to take it all off. Okay, good. All right. I'm also going to take off all my lines here, move drawing. We're going to go straight to the 6 and 17. I'm going to take off my 50 EMA and my 200. I'll add them back on later. Those are powerful as well. And we're going to use, let me see, which one we're going to use. We're going to use Apple? We can use Apple. We could use any chart. It don't really matter. Okay. So these are just lines on a chart. But these moving averages, the gold being my 6 and the white being my 17, they follow price, right? Price action is everything. And these follow price. What I like to see happen with this particular strategy, right? This is perfect actually right here. This is on a 5-minute chart. This strategy works on every chart. Daily, weekly, 4-hour, 1 hour, 15-minute, the 1 minute. It works. I'm waiting for when the 6 and the 17 cross. Let's go to the cross up for it right now. I'm waiting to see that 6 and 17 cross up. Price action usually pushes up, has a nice push up for a couple of bars, and then what it does is it pulls back. And when it pulls back, the 6 and the 17 get pretty tight. And what I'm looking for is that tightness usually ends up in either a pullback or some form of consolidation where the market kind of goes sideways for about 4 to 6, maybe 7 bars tops. And then it has a continued push in that direction. So this one, the 6 and 17 crossed up. I'll be waiting for that pullback or the consolidation going sideways, and then the continued push up. This you can use. We also went over that Oliver Velez strategy that, like in this particular case, would be green take out red. You can use something like that for that push up or the break of that consolidation. And it's a continued move up where you should be making some money. It happened here as well. 6 and 17 crossed up. It had a nice probably little consolidation here. And then once it broke out of that consolidation, it was a nice push up. Let me see if I can see a real good one to the downside. Here was a nice little one. 6 and 17 crossed down. Probably a little consolidation right here. And then a nice little push down, right? Does this strategy work every single time? No. But does it work quite often? Yes. And that's all we need. That's all we need.
Hey, right? Steve, I'm sorry to interrupt you. Can you show me one more time how you turned off your candles altogether? I'm trying to follow.
Not a problem. Not a problem. The settings button on TradingView is up here. That cog, charting settings. And then you go to symbol, which is the top one, and you click bodies, orders, and wicks.
Got it.
I just turned them on and turned them off. Boom, boom, boom.
Got it. Thank you.
Not a problem, brother. Not a problem. So this strategy is a trending strategy, right? So with this we're looking for a continued move in the direction of the crossover and possibly to be a big move. Even if it's a little move, we're going to take some money. We should be able to be profitable. Right? Now, as far as I'm going to show y'all, how I enter, where my stop loss is, where my targets are, all of that once we put the candles back on. But that's pretty much the strategy, right? We're waiting for the crossover to happen, either a pullback or a consolidation, and then break out in the direction of the crossover. Christy, I see you have your hand up. What you got to say?
Sorry. Yes, I was wondering, even when it pulls across your line, you still trust it? Because that's where I get messed up.
Even when it does what across the line?
When it does a pullback and the pullback goes all the way across your line, like it's changing directions.
So if that happens, like right in here, right? It crossed up, it pulled back, then it crossed down, then I'm not going to touch it. I'm going to wait for the cross and then the consolidation. So let's say this one crossed up and then it crossed back down. And let's say it crossed down and then it consolidated and then pushed down. That's the direction I'm going. So these are the fake outs. I'm not worried about the fake outs. When it crosses up and down and it crosses up and down, that's why I like to wait for that consolidation. I just want to see it tight. I don't want to see it cross back over. Sometimes it'll be a little cross and then cross back. That's fine. I'm waiting. I'm going to wait for it.
Okay.
So yeah, no problem. Not a problem. Great question. Great question. I was looking at the chat real quick. Oh, okay. All right, cool. All right, so now what we're going to do, and nobody have any other questions? Y'all see the strategy. We're going to throw some candles on it, and we're going to watch it. We're going to watch it play out, and then I'm going to have you guys give me some tickers. All right. So I'm going to do this with the regular candles, and then I'm also going to do it with the Hakanashi candles, and I'll show y'all a little bit about the Hakanashi. I'm going to keep it as simple as possible with the Hakanashi because that makes, for me, it makes everything just look so much smoother, right? And it's easier for my entries and my exits. Okay, so this is a 5-minute chart on Apple, right? And man, this is so many different plays. I love it. Okay, so this is that 6 and 17 that we saw earlier. 6 and 17 cross up. We had a nice pullback, and it consolidated a little bit. Now this pullback right here, once it pulls back and jumps up, I'm going to put my stop below that pullback. I might even give it a little bit more room. Right now, where am I going to enter? This is where that Oliver Velez situation can come in. I can say, all right, I got 1, 2, 3, 4 candles pulling back. This one jumped up over here, or I can wait for a green to take out one of these red candles here and say I'm going to jump in here. And like I said, pull my stop below here. Now, we had a nice big move to the downside. The next level of resistance, once I get into this trade, I'm looking at the previous resistance. So this one is kind of close, but that's going to be a first target. Once I get in and I let this play out, make a little change here. Now, the next level of resistance is way up here. I possibly would work. That was a big move. That's a far stretch. But even back here before that one, it was a nice level right in here where we had a lot of resistance in this area. And it just so happened that's exactly where it got to. So that would be my target number 2, looking back. So I'm always looking back. When I'm going to the upside, I'm looking at the previous resistance. After I get into this trade, I'm looking for that resistance. Where's my next level of resistance? That's going to be my target. When we're going to the downside, I'm looking for support. So let's go to the downside. I want to take these off real quick and delete these drawings. Now, the 6 and 17 cross here. Let me see something. I want to take off these candles for a second. I want to make sure I'm not talking crazy. Okay, so this is exactly what Christy was talking about. Cross down, then the cross up, then cross back down. So we're gonna play with this cross down here.
See, that one wouldn't affect me out. It was bigger ones. But
Right.
this one is great. Yeah.
This one I probably would have played this exact same one right here. That's cross down. I probably wouldn't have noticed it with the candles on there. I would have thought it was just a pullback. It didn't drop, and I probably would have played it, which would have been fine. I would have got in somewhere right in this candle here. But let's say we missed that, right? We also had a nice pullback right here. Now this red take out green candle is a beautiful candle. Let's look back. Let's look back at the next level of support. Next level of support was right in here. Now, as far as my stop, we broke down here. I'm stopping right in here. I'm not going to play with it. I'm going to stop right above here, give that little room, because if it gets back above this candle, I don't want it anymore. This was a nice pivot. I don't want it. This is possibly going to change the direction, break up structure. I don't want it if it's going to break that candle. I don't want it anymore. The play isn't no good. I'll wait for the next one. And as you have these trends going down, you can play these next pullbacks. I like to get the first one really and truly, because sometimes you'll get this kind of play here. It'll have a nice move down, and then it'll start to play around. So once I get that first pullback, I really like to get the first one after the cross for this particular strategy. If you want to do green, take out red the rest of the way down, you're more than welcome to do that. But for this particular strategy, I want to see that cross. The fun part about it is, whatever EMAs you use, you can put an alert. Hey, I want to know when the 6 and 17 cross. You can do this on the 5 and 13, the 8 and the 21. I don't care what EMAs you use. Just make sure they have a little bit of space in between. The 8 and 21 has I can't even think, what is that, 12 or 13 points in between. The 5 and 13 has 8, 6 and 17 has 11 points in between. Make sure they're spaced out. You don't want these EMAs. You don't want to use like a 2 and a 6 and trying to do this strategy. So you want to have them, even the 10 and the 20. You can use that if you wanted to. So you don't have to use the 6 and the 17, but you want to use these EMAs that have a good amount of space in between and wait for them to cross over and then have that pullback. This one was another nice one. 6, 17 crossover down, pullback, nice push down. Then I had another pullback, nice push down. 6, 17 cross here, pullback. So you can see that you're almost going to make money immediately. That's the fun part about this strategy. You shouldn't, if this thing starts to look funny and starts to come back up towards the previous high, I don't want it anymore. They can have it. They can have it. So we're going to go, this is the 5-minute chart. And I wanted to show y'all on the lower time frames because it's easier to spot them. Like, they happen so frequently on the lower time frames because you're going to have a lot of crossovers. But you still got to be quick. Get in, get out, take your money, right? Don't forget
I have a question.
Yeah. Oh, hey, what's going on?
What is the lower time frame?
Lord have mercy.
I knew he was going to do it.
What's
up, Jeff?
Come back to sleep, Jeff.
Good morning, everyone.
Good morning, Jeff. Good morning. Christy, you had another question? Oh,
I did. I already got it done over.
Okay, cool. Perfect. All right, cool. So let's go through a couple of tickets, man. Y'all give me a ticket. I had a couple, and I was going over, some of the popular ones. Heck, another one right here. 6 and 7 over, pullback, boom, nice candle to get in on here. That was beautiful. Nice move, continuation to the upside. Sometimes you're gonna get stopped out. Here go another one. Look at this. This is Apple on a 2-minute. End of the day play. Crossover up, nice pullback, nice entry candle right here. Let's go.
Do ES or NQ, Steve, when you get a chance.
Oh man, I don't have no problem doing that. But okay,
yeah, I would like you to do NQ from yesterday for that drop.
Yes, sir. I actually have one on a 15-minute on that drop.
Catch it from the Euro session. from where the initial drop started. It started like 8 o'clock at during the Euro session.
Okay. 8 o'clock in the night or in the morning?
AM.
Okay. Oh, Euro, yeah.
Yeah.
Okay, cool. All right. So some people favorite tickers, Tesla. Right? I mean, fix this chart. Let's go to Tesla. Let's go. Oh no, let's take a 5 minute. I guess it don't even matter. It don't matter. 6 and 17 crossover. You had a nice drop. Say you missed that drop. You did the 6 and 17 crossover strategy. You made some nice money just doing that. But let's say you missed it. We had a nice pullback, breakdown. Put your highs here. I mean your stop loss here, and follow the trend. Boom. Follow the trend. You had a nice another pullback for another entry. Follow the trend. When I say this thing works like gangbusters, crossover up in the morning, nice pullback. We had a nice morning start here. You see the 6 and 17 did not cross over, right? Even if you wanted to get in on this candle, nice push back up for some quick profits. This, I mean, from 1025, I mean, of course, the last level of resistance was right here, but we're not going to let this thing go, go against us without taking some profit. We don't do that. There's some professional traders in here. No, this is when I probably would have lost, right? 6 and 17 crossover, pull back. This would have been a nice entry candle to the downside, and the next candle up, boom. I don't want it anymore. Game over. But guess what? 6 and 17 crossed up right there, pull back. You can't, you take a loss, you say, all right, what's the next play? Came in a couple of minutes later. Nice push up to the previous level of resistance, get some money. There's money to be made in this strategy. Another cross up, pull back, let's go. More money. Like I said, it doesn't work all the time, but it works often enough for us.
Excuse me, see, I missed it. That is the 6 and 17, correct?
Yes, sir. Yes, sir. This is my 6 and 17. But like I told them earlier, you can use the 8 and 21. You can use the 10 and the 20. You can even use the 5 and the 13. You can use, as long as you have some space in between your EMAs, maybe 10, 8, 10 points in between, you can use this strategy and it should work out nice for you.
I understand. Thank you.
No problem. This 5 in Tesla, and mind you guys, this is all this week on these lower time frames. This 5 in, these are all this week. So this is money that you could have been making this week. 6 and 17 crossed over, nice pullback, a little bit of consolidation right here. They go to drop, game on, boom. This is Friday, right? Let's go to NQ now. And then hold on. We'll go to NQZ. Let's do that. All right. Woohoo! Wow. So this is what Brother Chloe was talking about. This drop this morning, that morning, I'm going to zoom in on this because this was a big deal. And
Beautiful drop.
Yeah, this was crazy. All right, so this one right here, matter of fact, before I even do that, this one failed, right? It did and it didn't. Crossover, because if you didn't take it, you had profits for a second. 6 to 17 crossover, consolidation, just dropped. This gave you an itty bitty amount of ticks. And then it pushed up and it crossed back over. It broke our previous high. And it was like, dang, man, that sucks, right? For life, things happen. But what happened? It crossed right back over to the downside. Had this beautiful consolidation right here. And if you was real gangster with it, you could have took that little 1 bar consolidation, and then the next drop, you could have took that if you wanted to, if you were getting real frisky with it. But this consolidation was beautiful. Then this drop right here led into a beautiful drop. Now, I'm gonna give you guys a quick situation with this drop. This drop from 920 went down, and this ended up being some 750 ticks on the 5-minute chart. Now, if you don't understand what ticks are and everything, I'm going to break it down in some simple math. every tick in futures for the NQ, which is like the QQQ in stocks and options, is worth $5. Okay, so we're gonna do some math. Let's say you caught this whole play to 700. Let's just call it 700 ticks. So, and just like how we do option contracts, you can do the futures contract. So let's just say we did one contract. Okay, each tick is worth $5. And let's say you caught this play. You listen to Steve and you said, I see the play, I'm going to take the play on the running. And you got 700 ticks this day. This was Friday. This is 700 ticks times $5 each tick. That's $3,500 for one contract. There's some people in here that do 3 contracts. So you do times 3. That's $10,500 by 11 o'clock in the morning from right before the market opens. I'm just saying, some of these strategies can make you some nice money.
I'll be standing right there next time.
So, do these strategies work? Yeah, sometimes they work all right. So that play. Oh, wait, we're not done. It happened again, right in here. Got a nice crossover, consolidation. Bam, put the stop right here. If it gets back above that candle, I don't want it. It got close right here, nice and tight. I don't think it crossed over, but that's okay. Here go the nice drop. Let's do a tick count. This tick count, let's say we got in somewhere in here. And we was down 35, 40 ticks. This thing ended up going down before it pivoted back up 239 ticks. You guys do your own math now, times 5. 238, 239 times 5. How many other contracts you want to put on there? There's money to be made. There's money to be made, guys. Option contracts would have been nice as well. But on futures, this is 1 o'clock in the morning. So for those who like to do overnight sessions, there's money. Any questions so far? Because now I'm going to take it to Hakanashi and show you how I play with Hakanashi.
Be ready.
Okay.
Hey, Steve.
Yes, ma'am.
I'm sorry. Good morning.
Good morning.
Can we go back and look at the 9 a.m. one that Crow asked for? I was looking at the consolidation, and I just want to look at it one more time to see if I would have gotten tricked out about with the consolidate. I know the EMAs didn't separate enough, so I think that's the question I have when it was kind of up, when price was when the EMA, your 17 was crossing up and down. I think I'm looking for which candle took out which for you to make a decision to get in.
You know,
That's what got me, Shante. When
Right?
that initial consolidation, that hammer candle, I misread it because I saw that hammer candle and I thought it was going to pop back up, but I should have known that it was going to hold and continue to drop. And I didn't want to get caught in the New York Open if this thing bounced up. So I was like, you know what? Let me just cut this trade now. Let me take what I got and wait and see what New York does when it opens. But I should have held it. But like I said, hindsight is 20/20, but you never know what it's going to do at open.
Or would you have done would you have done a re-entry when the EMAs has separated a little bit? That was kind of like between the consolidation and because I think I see me getting in as well, but I'm like, would I re-enter, or you suggest re-entering? Yeah.
That's what I did. I re-entered on the 5. Once we got that initial pullback at the open on the 1 minute, I waited for the 5 to get into a downtrend, and then I took it. So technically, by my entry standards, I was late, but I wanted to confirm that 5 was going into a downtrend before I got back into the play.
And so was it where Steve's cursor is, there's like a row of consolidation. So you maybe where that red took out the green before the last red. Okay. I'm just making sure I'm seeing.
That's what caused me to get out of my initial trade on the during the Euro
consolidation.
Session. Yeah, the consolidation.
I got you.
And see, with this, I love the consolidation because I'm looking for that break. We're already below the EMAs, right? So price action is already looking to go down. right? That's what the goal is. Now, of course, can it pop back up? Yeah, but that's why we have this hard stop. Watch
1, 2, 3, 4, 5. And that's like 10 candles at 5 minutes. Yeah, that made my pressure go up with the
That's gonna make it. That's why this is that patience. But you know what
I'll
though?
have patience. I've been patient.
That's what me. I'm always impatient, But no, even even on this pullback, this little 2 candle pullback in this drop, right? Then you end the trade and you're looking for it to go down. You want it to go down, right? But once you got that,
But you feel wrong because it didn't do,
I don't feel wrong until this hits my stop.
Okay, I like that. Okay.
I'm not wrong until it breaks the high of these candles, right? Now, if it goes back and breaks the high of these candles, and it's so funny that look back here. This is a support area right in here. So if it breaks this candle, I don't want to trade anymore because it's a high likelihood it's going to break my 17 because now it's pushing back up. Now, this is probably I would like to take it and then have it a little bit tighter, maybe like above right here. And that's my stop. And until y'all know I'm be strong and wrong. If it don't hit my stop, you guys know me very well. If it don't hit my stop, where am I going?
Strong and wrong.
I'm strong and wrong because I have rules, right? It didn't hit my stop. So where am I going? If it didn't hit my stop, I'm gonna stay in the trade. It's a probabilities game. I may be wrong on this one, but I may be right. If I stick with the rules, I'll be right on the next 7. I'm okay being wrong
Steve,
as long as I stick to my rules. Yes, ma'am.
I found a MAC. It's called MACD profit candles, but it basically, because I can't always see the crossover when it happens, and it's okay if I get in a little late, like after the pullback, but I'm trying to like get my entries better. And this thing just confirms crossover so visually. If there are any really visual people out there like me, look up MACD profit candles, but it's like having a chart under your chart, and it just helps you to really see, oh, dog, this thing is really staying under my XYZ line or whatever.
Yeah, I'm trying to minimize my indicators. So I like how Steve shows us this with the price action because I feel like it's the cleanest as far as me for learning.
Yeah.
Oh yeah, anybody who doesn't need it, I'm just making the recommendation in case anybody else is visual.
What you say about a trend line, Jeff?
I'm offended.
You'll be all right. That'll be all right. This is all right. So, one thing, like I said, with the alert, I like an alert. I'm waiting. I can go drink some tea, whatever. Hey, once it's the 17 crossover, let me know. And the alert that happened. Now at that point, I'm looking, especially because we like to go on 2 minute to 1 minute to 5 minutes. Once that EMA crosses over and I get the alert, now I can say, okay, let me sit at my desk because I'm looking for about 5, 6 candles of either pullback or consolidation at this point. So now I can pay attention. That confirmation would be cool. That alert will be good so that you can know that it's official that the EMAs have crossed over. And I want the alert to be when that bar closes, so that EMA can stay stuck crossed over to whichever direction. So that's one little little hint, so you ain't gonna be sitting in front of your chart every 5 seconds. Unless you're like
question about that. When you do your alert, because especially when we're doing futures, price act, although we're on the 5 minute, but are you also like, okay, for example, if we do this on the 5 minute, are you looking for your entry on the 1? And are you setting, is your alert on the 5 minute or is your alert on the 1?
Chart. Everything's on the same chart. Now,
which one?
Which one what?
Which one is your alerts on, the 5 or the 1?
The 5 minutes.
On the same, whatever chart, this is going to be based off of the same chart. Everything here is based off the same chart, right? Now, I do use multiple time frames, and I'm going to give y'all a hint if I have enough time, how I use multiple time frames to see these about to happen before they even happen, right? But when I'm playing this strategy, I'm staying on the same chart.
Gotcha.
I'm not going to be on the 5 and enter on the 1. No, I'm going to wait on this. I'm looking for the 6. If I want a 1 minute, I'm looking for that 6 and 17 to cross on the 1 minute, the consolidation to happen on the 1 minute, the entry and the exit to happen all on the same time frame.
Thanks for clarifying that. That's a big deal.
Okay. Really? Okay. Yeah, it is. Yeah, it is.
Yeah.
Now, why do you do that? Why do you not build it? Sorry. Go ahead, Chantal.
When you set your alert, are you choosing for the crossover, do you choose candle? You know how there's an option for like one, like
Candle
cross
close.
or a candle close? That's my question. Yeah.
Yes, ma'am.
Okay.
Because
Because I feel like sometimes if I'm waiting for, because I'm impatient, because I'm on the 5 minute and I'm like, am I waiting for the candle to close? But I see it took out 2 minutes in. So that
Right.
kind of shakes me out sometimes too, because I don't know if I'm anxious or impatient. I haven't figured it out yet.
Not a problem. But see, this is the fun part about this particular strategy. You don't get in on the candle close either. This is just to confirm that the 6 and 17 have crossed.
That's true.
Because now you're just waiting for it to do the
Red to take out green.
Right, the consolidation or that pullback. That's what we're
Okay.
waiting for. You know, this is the patient strategy. This one right here is a continuation. We're looking for that continuation. So you're not going to get in at the prime. This is not one of those strategies where you're like, oh, I'm trying to get in at the low or trying to get in at the high. This is a continuation strategy for a bigger move. We're looking for that move in the direction of the trend, so that we can just be in it when everybody else has been sitting in there playing around in that consolidation. That thing breaks out. We want in, and we want the flow. We're trying to flow like water. You know, we're working with the EMAs. We want these things to continue to push, and so we can make our money in the direction of the market. Where's everybody else going? We just picking our time to get in. Our time is when that consolidation breaks or that pullback happens, and we'll let it flow. And I can show this to you on any chart. This happens so often on every chart. It's crazy.
Steve, can I ask you a quick question?
Absolutely.
So when you see the cross, are you waiting for the candle to close above or below it to take the trade? Or like, how are you confirming that the trend is really changing at that point? And you might have explained this. I came in late. I'm sorry.
Nah, it's okay. It's all right. And the funny part is, you know, you don't know for sure, right? But it's a good likelihood, because when the 6 and 17 is crossed, right, especially on a bigger time frame, that's also like as the last confirmation. Like, you know, I'll use Stoke RSI to MACD. The 617 crossover is going to be the last one, right? After all of those have happened. So what's been shown is that this is where price is going in the direction that the people want it to go, right? So once that happens and everybody's starting to take their money, what happens is, I like to use psychology. People, when that 6 and 17 crosses over, people are like excited, and then they start taking a little bit of their money, and then we get the little pullback or the consolidation. And for those who are like, oh man, I missed out or whatever, but this thing is pushing to the downside, or we got a little bit of a pullback. Okay, cool. Price went up a little bit. Now I can shoot it back down some, because the majority of people are already pushing it down. We're late to the fact that people are pushing it down right after this particular cross right here. But then the folks who said, oh man, I want to get in on some of that downside, when it pulls back a little bit, that's when people start to jump back in. So we're getting on that second push to the downside. So once we have that consolidation breakout, that's kind of our confirmation that, okay, people are still interested in this going down, at least until the next level of support. So let's get in, whether you want to get in on a red take out green, or on a break of the consolidation in itself, or you get a couple of candles pullback, and then the break of the low of the previous candle. These are entries that, you know, that I recommend, you know, and you get in and you get a nice little flow. You should get a nice little flow pretty soon after. I just worry about my stop.
Got you. So you like to wait for that pullback first, and then wait to make sure like that pullback isn't higher than the previous.
Like this is my high right here, right? So that's my stop. Once I see this pullback and then I get that pivot, I'd like to take out a green, take out red. I mean a red, take out green to the downside. But you can get in on that pivot if you wanted to, and then you'll have a tighter stop. This one here, I'd probably get in somewhere in here.
Got it.
And then I'd look, and this is on regular candles. I'm gonna show you what I do on Hakanashi candles.
That's helpful. Thank you.
No problem. All right, so what I'm gonna do now, so everybody's good so far? Y'all good with this strategy?
Yep.
Yes,
Very.
sir.
All right, cool. I just want to make sure everybody's on the same page. Everybody kind of understands where I'm going with it, what's going on. Cool. Let's go into, somebody give me a ticker. Somebody give me a ticker. Any ticker.
Yes. Wait.
All right, give me an options ticker. So we already did NQ. I ain't going to do another one. Y'all can
Meta.
my futures people, boy. My futures meta is good. Meta is good. My futures people ain't no joke.
Meta. Yeah. Got it.
I gave you
Futures is the
in
future.
chat, Steve.
Hmm? Oh, you gave me something in the chat?
I gave you a few tickers in the chat.
Okay, cool.
Obvious
cool.
ones. I'll repost.
Okay, yeah, I'm looking for it. I'm like, where is that? All right, cool. So I see one immediately. 5-minute chart on Monday, September 11th. Had a nice crossover to the upside at 1 o'clock. About 3 candles in. We had a nice break. Green takeout red here. That's my money. That's the money sound. That's the Oliver Velez money sound. Let's go back. I like to go back in time. Cross over to the downside. Nice pullback. Enter in somewhere in here. Look at that pullback. Even though the candles went above the EMA, guess what? My 6 and 17 just got tighter. That thing start pushing back down, you can enter. Get in there. Your stop loss is at the top. You in here, next level of support, down here, next level is down here. And guess what? EMA never crossed back above. And you could have made money all the way back down here to this level of support. Had a nice crossover here. Look at that. Nice crossover. 2 candles, 3 candles, pullback. Nice entry. Boom. Money. Let's go into Hakanasi. Okay. So anybody don't know what Hakanasi candles are or don't have no clue what they are and how they work?
Me?
Oh, Jeff, stop it. You don't even like Hakanasi candles, but that's okay. Okay. Hakanasi candles are a little different from regular candles, but as you can see the difference, let's look at the difference. You have a lot of red and green candles, and people get a little nervous at different sizes and everything else. The Hakanasi candles, what they do is make things a little bit more smooth. They're an average price of the previous 2 candles, and what they help do is they help show you the momentum, which trend or which way the market is going, right? And it kind of shows you a little bit of the strength as well. So with the Hakanasi candles, you are going to be a little late when it comes to your entry, but you have a little bit of a better confirmation and the conviction of the moves. Combining this with the 6 and 17 strategy that we just went over, actually, it relieves a lot of my stress on what I'm getting in. Am I comfortable getting in? How long should I get in? Stuff like that. So we're going to use the same strategy here. 6 and 17 crossover. Nice pullback. 6 and 17 are nice and tight right here. Now, my entry candle is the green Hakanasi candle. And now, I want to see the first green Hakanasi candle with no wick at the bottom. The no wick at the bottom is telling me that this here wants to push up. This is where the momentum is going. This is going to be my entry candle. My stop loss is going to be low of that pivot low, that swing low. Once again, you can go for the previous resistance for your target take profit. Or one thing I do like to do is follow the green candles. I like to follow the green candles. Now you see how we had this one. This is actually a doji candle. The ones that have a wick at the top and the bottom are called doji candles. That's like how we have them on stocks and options of the regular candles. Those could mean it's going to turn. There's a possibility that it's going to be a reversal candle. And this trend can change. Not always, but sometimes. Like we had here, we had a nice down move here. You started to see that shows weakness in the trend when you have those wicks on the top and bottom with Hakanasi candles. So you want to keep seeing them with the no wick at the bottom, no wick at the bottom, no wick at the bottom. And if you want to get spicy with it, you can start moving your stop loss to the bottom of each one of these candles as well. And say, hey, when it comes down and crosses, then I'll get out. That's an option. We can do that as well. So I like to see these. I'm just going back in time and just showing you 6 and 17 crossover. We had a nice little consolidation here. Candle, no wick at the bottom. Take the entry. Next candle, you was making money. This is the 5-minute chart. 6 and 17 crossover. Nice pullback. Bearish Hakanashi. No wick at the top. Had a little play of consolidation. We made money. Look where it came to. Previous level of support. Wow. Wow. That's crazy. 617 crossover. This one was itty bitty money, but it still made you some change. 617 crossover to the downside. Nice pullback. Let's zoom in on that one real quick. 617 crossover, pullback, bearish Hakanashi with no wick at the top. Stop loss, previous high. Next level of support is right here. That's the first target. I like these trades. I love these trades. Y'all see why I like these trades? It's a nice trending trade. It's simple. It's simple, baby. Like I said, you're not going to win an open hit or a loss. Okay. I'm going to show you a win and then a loss. Okay. 6 and 17 crossover. We didn't have that. Look, it's like 2 or 3 candles of pullback. Entry candle. Boom. This is what I'm talking about. You got the doji candle here, red candle, doji here. It might be time to get out with profit. We didn't get to the next level of support. Resistance, which is way up here. It would have been nice. But you got to take some money. You got to make sure you take some money.
I have a question, Steve.
Yes, ma'am.
On that, where that doji is, in the candle you would enter, are you entering when price
closes?
Oh, okay. So I probably would have looked left and entered when it got up, when the bar was above
And
those previous. Okay.
You can. And actually, the way I learned was to do that. The entry, once when you break this consolidation with that candle, enter the trade. This is what I've seen, and what it hurt my feelings sometimes. The candle will still be going, it'll break, and then it'll change in the middle of the candle before it's closed, and then it's no longer a bullish Hakanashi with no wick at the bottom. And now I'm looking at another doji candle, and then this will break down. That used to upset me. So I said, you know what? I know I'm going to be losing, I'm going to be missing out on some money, but the confirmation for me is more important than that loss. I'll take the loss if it still doesn't work out, because my stop is going to be pretty short right there. Right? Or if it starts to go red immediately, I can be like, you know what? I'll get out of this trade and take an even smaller loss. But I want, all jokes aside, once I get this bullish Hakanashi candle and this thing confirms and it's at the close, maybe like 10 seconds left, 5 seconds left, I'm getting in a trade. And then I want to see the next candle go higher, 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 higher. I want to see those kind of moves, right? Here goes another one, 617 crossover, boom. This one, did we get to the previous? We did get to the previous thing. This one kind of would have been kind of funky. This one kind of sucked. It would have stopped me out right here if I was looking to put a bigger trade. And then the next candle was another candle with no wick at the bottom, and he could have entered on that one. And sometimes you gotta go through that, you know. And that one was a beautiful. That's why you can't, when you take these losses, you gotta just suck it up, because the next candle could be your candle. It's just still a consolidation. It just acted funny. This could have been 9:30 in the morning. This could have been some kind of news, something. Matter of fact, you wouldn't have even look. Wait, we on Meta, whatever. Oh, this is the day before, the end of the day. So this is the first candle of the day, the second candle of the day on Meta. You would have got in on here. Oh my gosh, big money, big money. Here go one that would have been sucky, because I like to play. Sometimes I like to get the first one, but I'll take the second one. We get a pullback. Ain't no reason you can't take another one. This would have been a nice entry. Looking for some more upside, maybe previous high, and look what happened. The low would have been right here. This thing came and said, no, and took you out. It happens. It happens. Sometimes you make some good money, sometimes you don't. I'm looking for another one. Where's another one? Here go another one. 6 and 17 crossed up. Consolidation. Boom. Previous high. Did we make it? We made it. We made it. Whew. And
Do
these
you
pullbacks.
prefer to wait? Because you mentioned market open, and I think when Club did his trade, something it was close to market open. Do you prefer to wait? I don't know if I want to say a certain amount of time, maybe 5 minutes, 15 minutes, or whatever after market open before you enter, or because we're looking at pre-market on some of the
Yes.
regular tickers.
Mm-hmm. Now, you know what's funny? I found it to work and not work. So I had to take the trade. So if I
Okay.
have pre-market on, if I have to, I don't care what time it is.
Okay.
If I have the pre-market on and it's work that I've missed trades because I didn't have my pre-market on SPY, and this was playing out perfect. Like say this was like 850, and this is happening, and then you don't see that all of this happening if you don't have the extended hours on, right?
Okay.
So, but when you do have the extended hours on, and this be the first candle, oh my gosh, that's instant money, instant money. But sometimes I'll be missing it. I'll be like, oh, if I had my pre-market on, I would have saw that. But at the same time, I've had my pre-market on, and it's been a flunky. It's been a flunky play. It'll give me the play and then pushed up and then piss me off. And it happens. The market is here to piss you off. So allow it. It is what it is. Here go another one. 617 crossover, pullback, boop, and this is like a really small pullback. 2 candles.
Hey, Steve.
Hey, what's going on?
So were you saying having pre-market on or off can be hit or miss either way?
That's what I'm saying. So let's play the trade. If you see it, play it.
Gotcha.
If you see it, play it. Then I ain't gonna tell you, I don't lie. I wish I had more time to rock with y'all with this one, because when you add this with multiple time frames, your support and resistance and all that other stuff to see what is oh man. All right, what time? I got 4 minutes. Okay. I'm gonna give y'all a little bit more sauce for the last 5 minutes. Y'all ready?
Do it.
Yeah,
All day.
Do it.
Let's do it. Okay, cool. Okay. Y'all go. Okay. So y'all been in most of my classes. Y'all know when things are overbought, oversold, we like to look at that on the higher time frames too, on all time frames. But let's say the hourly, right? So what I like to do, and I haven't done it in a while, I play the let's say the hourly. Hold on. Let me take all these drawings off. Let's drop this to even the 15 minute or even a 5. We could do 5 too. Now I want to throw on my, oh no, I'm taking the squeeze. I want to say the Stoke RSI.
Oh, yeah.
All right. I'm gonna try to make sure these are all lined up for you guys. Okay.
Your chart is so clean.
Oh, right here it is. Sometimes y'all see on some of my charts be having to support lines and stuff like that, support and resistance, and this works phenomenal with support and resistance, especially on the bigger time frame. Okay. Am I on the same chart? No. All right, so let's do meta. Let's do meta over here too. Okay. Cool. Let me see. Did it work well here? Was it here? Was it? Where is it? This one was okay. We can use this one. That's fine. So when I see price action either overbought or oversold, it's perfect. Cool. Okay. You see how on 3:30 on Monday, September 11th, on this hourly on my right, it was overbought, right? So I'm saying, okay, it's overbought. It's a high likelihood it's going to come down eventually. That's when I like to look on my lower time frame and wait for these plays, right? So now, when I see the hourly overbought, I thought my 5 minute or my 15 minute. I like to go like the 5 minute or the 2 minute, but I'm going to say, hey, when that 6 and 17 cross, I want to know about it because we're overbought on a bigger time frame. So it's a high likelihood this is going to come down. But I want to know when that 6 and 17 crosses, on the lower time frame. So because I'm using the stochastic on a bigger time frame, now I'm using my 6 and 17 cross pullback strategy on a lower time frame. Now you can also use just the 6 and 17 cross if you want to and enter on that 6 and 17 cross. But today we're doing 6, 7, the consolidation and pullback strategy. It happened
And this will definitely help you stay longer in the trade.
And it gives you, what it also does is, seeing that we are overbought in the bigger time frame, it also gives you a better vibe that this is probably going to work out. You see what I'm saying? On the lower time frame. So now on the lower time frame, you can get that 617 cross, pull back, and entry. Look for your next level of support and get some money. You can do this on a regular candle, and you can do it on Hakanashi. Doing it on a regular candles, you're going to get it a little bit faster. Hakanashi, you're just going to get that confirmation. So let's look at this last one, right? This was on Thursday. We were overbought, correct? Cool. First thing in the morning, you got a nice drop. Let's say you missed the drop. Oh man, I missed the drop. 6 and 17 crossed over from being overbought. We had a nice pullback. Got an entry to the downside. Next level of support is down here, but guess what? We had a nice move, even though the 6 and 17 did look like it crossed back up. But you made money. If you got in here, you made money. Oh, the next level of support was right here. You made money. Then we had a nice bear flag. Then it dropped some more. But this was the entry, that pullback. Right here, this was your stop loss. The pullback, once it dropped down, that's your stop loss. How often did we hit the stop loss today, guys? Not often at all, right? But by using multiple time frame confluence and catching it when these things are overbought in one side, then looking for it on the other side, you can get to make some real big plays. So that is my time,
I do have one question.
Yes, ma'am.
Oh, it keeps leaving my brain. As soon as I go to open my mouth, I forget it.
Nope.
Don't
worry. You know, you always got me. I'm always here for you. So don't do worry about it. It is time for mindset. Jeff is about to start his mindset class. We're about to get our mind right, guys.
Hang on, Steve. Just one thing, real quick. On the bigger time frame, you wait to be oversold. You look
or
at
overbought,
overbought or oversold on the bigger time frame, on the 1 hour, etc. Drop down to the 5 minute, 3 minute, 2 minute, whatever your lower frame time frame preference is, and then look for the correlation of that on the lower time frame to line up, or it's probably already happening if you're seeing it on the bigger time frame. Yes.
Exactly.
Yeah. And now I'm just waiting for that 6 and 17 to cross over on the lower time frame. Once I see it in oversold or overbought on a bigger time frame, I'm just waiting for that pop. Here we go. 617 pull. Boop.
Oh, so I thought you said earlier you don't drop down. You do drop down?
You know, this is
additional sauce he's talking about.
This is additional sauce.
Oh, okay, got it.
The play is on the lower time frame, the 6 and 17.
Okay.
I'm just using the overbought or oversold conditions on the higher time frame to say, okay, cool, we're overbought, oversold. Now I'm gonna go to my lower time frame and look for my play. 6 and 17 cross, pull back, entry. And this is like what Shantae was talking about, when you have that pullback and it breaks the once it has the pullback and it kind of breaks the high of that pullback, boom, she can enter.
Yeah, that was crispy.
Yeah. And
that's what he's looking for in the lower time frame is his entry, and he's using the higher time frame to confirm the trend, and the fact that he can stay in that trade a little longer.
Yeah,
and then drops down to the lower to watch for the pullback and enter.
And watch for my, and then I can just enjoy. I can enjoy the ride most times. But yes, family, it's been a pleasure. I hope you guys enjoyed it. Of course,
we want more
next week. I'm always here for more. I might actually be around a little bit during triage. So we can go over if you have any questions. We can go over it at that point in time. But of course, we're here in the community. We're here every day on the trading floors. So any of these strategies, like I said, they work on options, crypto, futures, everything, forex. So hit me up and we'll get it going. I got you. So let's go enjoy some mindset right now, and I will see y'all later.
Thank you
Have a
so much,
high
Steve. This
on a
was
Saturday
really
morning.
good.
Nah, no problem.
Thank